Thank you for joining us for this Latin America Paydirt Unlocked. We're going to unpick the secrets to success in Latin America, and if you've had a look at the 4 companies that are featured on this panel today, you'll realise that they seem to be unlocking the potential of Latin America in a way that many Australian companies never have before. As I said, my name's Dominic Piper. I'll just introduce our guests. To my far left, although not far left in the South American political sense, is Darren Gordon, MD of Centaurus Metals. Next to him is SolGold Chairman Liam Twigger. JP Vargas de la Vega, MD of Galan Lithium, is next to him. And then to my immediate left is Easterday, MD of Hot Chili. Again, if you've had a look at any of the companies, you'll know that we've covered the full gamut of almost the region. From as far north as Ecuador, through Argentina, through Brazil, and through Chile, as well as through copper, gold, nickel, and lithium. So there's plenty to talk about. Christian, I'd like to start with you because you probably Hot Chili's probably been operating there as long as any of the companies that we're talking about at the moment. There's absolutely no doubt that Latin America is one of the most prospective regions in the world from an exploration and mining perspective. You know, it regularly attracts the most investment dollars in an exploration perspective. But when it comes to Australian companies, we've been so entrepreneurial elsewhere and successful elsewhere in the globe. But there's not been a lot of Australian success stories in Latin America. Is there a reason for that?
Yeah, it's a bit of a chicken and egg type thing, Dominic, and money follows money. As you said, the Australian entrepreneurial endeavour in the mining sector is well renowned. A lot of Australian success in Africa. The Americas has always been that jurisdiction on the other side of the world that the Canadians and the US investors have dominated for a very, very long time. So firstly, getting a foothold into South America against our main rivals on the other side of the world has always been difficult. And like you say, there's the big success stories of South America. You can think of Andean, and you start to struggle how many have there been. Really, it's a factor of how many companies have gone over. In the last boom, we saw Hot Chili followed by about 40 companies into Chile. And then the downturn saw all of those 40 companies put their tail between their legs and turn into, tech stocks or return to Australia. So, I think that the more attention that is given to that continent by the Australian investors, we have one of the best mining industries in the world, one of the most talented mining industries in the world, and we've really risen to the forefront. In a vacuum that the Canadians created while their market got hollowed out by Bitcoin and cannabis. So, I think that there's a great opportunity for the Australians to really wave the flag over there, and very, very pleased to be part of this grouping. Some of the leading large-scale developers in very hot spaces over in Latin America. So hopefully a few more successes, and we'll have a few more follow us.
Darren, you equally have been operating in Brazil a long time, and Christian talked about a couple of the misconceptions or perceptions of the region, that the North Americans have tied up all of the good land, or that the majors would dominate. But you've managed to carve a niche for yourself in Brazil. Centaurus has, and picked up a couple of projects here and there, moved around. What's the key to staying active and staying in the game in a country like Brazil?
Look, I mean, for us, first and foremost as people, you've got to have the team in country, you've got to have time in country, you've got to be genuine about your effort. You can't be looking to go into these remote jurisdictions on a whim. So you need to be, very conscious that you're moving into a part of the world that has different cultures and so forth, and you embed yourself with good people, as we've been able to do at Centaurus. We've got a team together that's pretty much the core group has been together since 2010, and that's allowed us to sort of continue to operate, find new opportunities, and then obviously we've had the success that we've had over the last couple of years simply because, while not being able to move around with COVID, we've actually had that same team on the ground, people that that people can get on and do things, and you implicitly trust the way that they go about it.
Thanks, Darren. JP, you're unique amongst the panelists in the fact that you're from the region originally. When you built the Galan story, what was your pitch to Australian investors who were perhaps reticent about investing in the region, investing in Argentina, investing in a style of mineralisation that's not well known in Australia?
Well, before that, I just want to say I thought that we were going to be Take That and you were going to be Robbie Williams. Look, there's starting a company from scratch is not easy. And I'm founder of Galan, started this on an idea 4 years ago. But before that, I was mining analyst, and actually I was covering hot copper as an analyst when I was in Sydney a long time ago. And that also inspired me to go out into Chile and look at things. And you need people and you need luck. And you need to be in the right market. So if you can align those sort of things, then to get the investment, it becomes simpler. Now, there was a lot of convincing initially at Galan to get people over the line to make them understand that my idea was a bit of left field, and luckily I got the right shell with the right people, right attitude, that it supported us all the way. And now it's Galan, and I'm very pleased to have a fantastic board and team down in Argentina to get to do things, even with COVID, to this stage. So overall, big part of that equation is luck. You need to have a thesis, and I guess from my end, being a mineral economist, being presenting this on an ongoing basis, and seeing from the other side as well what people are presenting to you. You sort of reverse engineer that and see what people want to see and hear, and what are the drivers. So it's easier to pitch a straightforward story for investment. But being from that part of the world, you don't get funding. If you live there and you have, if I wasn't here in Australia, I would never been able to fund Galan because the stock exchange doesn't allow you to do that. You'll have to go and trying to do it privately, and do things privately even in Australia is hard. So there's not a mechanism in the industry in South America in general to go and look for funds to do early explorations to move forward a project down all the way to development, which is what we're doing with Galan now. And so to the big picture, it's if you got something that's good, you know, you have to put your heart on it. And I guess for Galan to give that next step, because as you say, there's a big disconnection. No one knows Argentina. You say Argentina, and even I have my own goals about Argentina, to be honest, being from Chile, you know, just you always hear things. But it's not until you go there and actually see for yourself. You have to invest time. And then you start understanding the right channels, how things work, and it's an investment. So for us, it's pay off, but nothing gets done quickly. The language barrier for me was not a problem, it was the funding. So I was able to marry both, and a reflection of that is in 3 years since listing, we moved a long way. And there's no loss in translation operating for us in Argentina. And we have a team that understands what we're doing, has the same sort of values that you find in the exploration industry in Australia. So it's a combination of plenty of things, but the place is open to investment. You just have to find the right people and the right project and the funding as well.
Thanks, JP. Liam, you were slightly differently, you were parachuted in, if you like, to a situation that was already on its way to a success with SolGold in Ecuador. What did you look at when this opportunity came in front of you to be chairman? What were the boxes that you needed to tick from a jurisdictional setting before you were comfortable to take on the role?
Well, it was amazing that Ecuador was there for as long as it was before mining companies or people recognised that there were great opportunities there. And the difference with Ecuador being close to the equator, or the equator runs through, when you compare it with other jurisdictions in Latin America where ore bodies outcrop. If you go to Chile, you know, geologists trip over ore bodies because they see them there. But the thing in Ecuador is that they're covered in jungle. So we had to have people that were prepared to look through the jungle and find an ore body. So it was very much untapped, and we were first mover in there. And it was a combination of Nick Mather, who's got an unbelievable track record in discovering fabulous deposits, but also partnering up with Steve Garland. So he's in the audience here, Steve at the front. He is a legend for porphyries around the world, and the fact that he was partnered up with SolGold, and it's sort of helped with our blueprint for our discovery model. So I managed to catch up with Steve, had a chat about him about the world and what he thought, and I think he's also with Hot Chili as well. So we're lucky to have such expertise and legends available to us in Australia. So it was that combination, sort of first mover, and Ecuador was sort of coming out. It's they've just had an election. A lot of South America, there's been a shift to the left, but with Ecuador, with the recent election, there's been a shift to the centre right, and a recognition that the country has a lot of debt. And as much as there is sort of an anti-mining sentiment prevalent, I think people are being commercial and recognising that you can mine on a sustainable basis, and there are great opportunities to trade your way out of these problems. So we've had a very supportive environment, but it was a combination of the I guess the prospectivity and the people.
Liam, I'm going to stay with you because SolGold again is a bit different to the other companies in that you're listed in London, and you also have a TSX dual listing. Again, we know it's quite tough to raise money on the ASX for Latin American projects. Can SolGold be a success in Australia, or did it have to be listed somewhere else? And how do you marry the TSX, Toronto's sort of favour for Latin American projects against the brilliant performance of the ASX in recent times?
Yeah, it's a great question. I think historically, Latin American projects have been very well valued on the TSX, and the pool of money and the peers and the valuations have been super strong. So if you've got a Latin American project, that's where you want to be. We are listed in London, then had a secondary listing on the TSX. But the last 2 years, Australia has shot the lights out across the globe in terms of raising money. In terms of valuations, the amount of capital raised, we've outperformed the TSX for the last couple of years. So as in terms of a centre of capital, Australia is probably leading the world. But in terms of peers, you don't want to be an albatross being the only sort of junior or developer on an exchange. And where we are in London, there's only sort of one SolGold. And to get analysts to cover you there's a lot more institutions in North America, and there are a lot more peers that are twice, 3 times their value. So we haven't made enough of our TSX listing. We haven't fired a shot in terms of raising money there, but I think that's something that we need to do, and I can understand why you'd go there. But make no mistake, the ASX is the place to be for risk capital around the world at the moment.
Christian, how do you balance that? I know your register is full of North American investors.
Yeah, we caught a few North Americans along the way, like Rick Rule and the Sprott Group, as most people know. But really, Liam has touched on something that is central to Hot Chili's immediate strategy. We just announced a consolidation of our share capital to align it with the North American peers. At the moment, we're the largest copper developer on the ASX, outside of the control of a major. All of the major developers in the copper gold space are on the TSX or TSXV. All of them in the last year and a half have quadrupled or 5 times their share prices. Their market capitalisations range from 600 million to 1.4 billion, with resources that are smaller and lower grade at 4,000 metres altitude, and not in Chile. So, when you're sitting here as Hot Chili, why are we shunned? Our market capitalisation, sits at this point, and there's guys with smaller projects, lower grade. What is it the Australians don't get? And we've well understood that disconnect for many, many years. We were just waiting for the right time. Now sitting with 750 million tonnes, Glencore taking a 10% stake in the company, cleaning our capital structure up so we trade in the dollars alongside all of our peers that trade generally between $2 and $14 a share. All of these things are coming together, and I think since we announced that, we're up nearly 30% in the market, and the Australians, while it is the best pool of capital for venture capital in the world at the moment, does it do large-scale copper? It never has. And the last time that Australia had a large copper developer was Equinox. And I think most people know that the transformation of that market capitalisation from 400 million to a $7.2 billion takeover inside of 15 months was sparked with the TSXV dual listing of Equinox. So it's a very well-worn path. It's disappointing that the Australians don't embrace the large copper space, but I think SolGold's a bit of a trailblazer, and we're certainly using SolGold as a bit of a blueprint. I'm sure that most people know that the deal metrics with Glencore almost looked identical to Newcrest's investment, and we're very lucky to have Steve Garwan alongside us. So thank you, Liam, for treading the path before us. But no, it's something that hopefully in the future the Australian market will understand where 85% of the world's copper comes from in these very, very large scale deposits. And it's certainly something that Hot Chili is now making a move to dual list. In the coming months, our application process is going very well.
Thanks, Christian. Darren, you appeared on this very stage a couple of weeks ago at the Australian Nickel Conference. How, when you're looking for peers to compare yourself to, do you use Australian-based companies to compare yourself to? Do you try to put aside the Latin American perspective of the story when talking to investors?
Absolutely, yeah. I mean, being in Western Australia, we've got such a deep nickel industry, particularly nickel sulfides. So we're sort of pitching ourselves against all of these groups simply because of the scale of the resource and where it is and what we can do. And there are a number of groups that might be listed internationally, particularly in North America, and I'd say the North American market does understand nickel sulfide pretty well, but there's still not a huge amount of nickel sulfide plays out there. So I feel in our situation it's a little bit different in that I still feel like we have a discount because we're in Brazil, but I feel like that discount will close over time. One, as we develop the project further, but two, as this whole EV thematic takes hold, that eventually nickel units are going to drive the day, and we've a group that's got a whole lot of nickel units. And so then when you're at that point, people will look beyond where that project is. Yeah, they'll have to tick their box and they'll make sure the whole ESG side of things is going the right way and your carbon emissions are looking right and all that sort of stuff. But at the end of the day, when you can't find nickel anywhere, and we know the exploration process takes a long period of time, that I think we'll be looking side by side with the guys that have been here in Australia and sort of mine nickel sulfides for a long period of time, and that's where we need to get our valuation to. And as I said, I think we will be able to do that the more that we can show that this project is going to be developed and really show how that nickel is actually going to go into that battery space.
JP, I suppose you're in a similar situation in that we've got lots of lithium projects and lithium developers here in Western Australia. It's a very different style of mineralisation to style of deposit to what you're looking to develop, but you do have precedents and larger companies to follow in the footsteps of in Orocobre and Galaxy, of course. Do you use that comparison, or do you compare yourself with the Australian spodumene?
Look, the merger of Orocobre and Galaxy is, yes, definitely a large merger. But then you compare them to Pilbara Minerals, and then you go, not so sure. So you tend to think that the market premiums projects are in Australia, and that makes sense. That's something to backyard. You know security, you know the politics, and so it should be. But yes, it doesn't mean that companies cannot grow significantly, and you see in the stellar rise of Orocobre from its 10 years plus ago. Galaxy has done very well as well. So the company market cap is around $5.5 billion. The inventory of these companies is significant. We would like to think that we can be a fraction of that, and those are trailblazers for us. The geology or the market is divided pretty much in two. In Australia, you have hard rock, you got spodumene, and that's what you sell pretty much, go all the way to China, and that gets converted into lithium hydroxide, and that goes into your phones, into your car batteries, and so on. And those are the lithium ion batteries. And then on the other end, you have the salt flats in the lithium triangle, and they've been producing lithium for 36 years from SQM. That's the longest. So it's a new industry. So it's production of lithium from Australia. But then the lithium is in a brine solution. So you don't have to crush and screen. You don't have to you just pump it, evaporate, and that's how it's been done so far. And then you produce lithium carbonate. And that lithium carbonate goes exported for all the lithium market uses beyond battery as well. It goes around the pharmaceutical, in aeronautics, even the glass, you know, your Gorilla glass has got lithium in there. So there's definitely many uses of battery, of lithium, but the battery is the main driver today. But then the lithium carbonate coming from South America, it targets another market in the battery sector as well. You go the LFP, which they got lesser charge of the lithium ion that goes into your phone. But yeah, it offers a bit more safety in terms of they don't catch fire. And yeah, but the range is lower, so it doesn't get the same punch. So there's horses of courses in terms of the lithium revolution is massive. You know, if you want to put this in a context, we are 100 years ago the horses got retired. Today the combustion engine is getting retired. So it's a massive, massive change, and affected not only lithium. It's affecting copper. It's affecting also nickel. It's affecting everyone. And if you ask me, the market is not prepared for the demand required to completely change this. And when this happens, you know, the adoption of new technology, it doesn't take long. It takes 10, 15 years, maybe less. And so we're all part of this massive change in the world that we haven't seen ourselves in since 100 years ago. We've seen technology change, you know, the adoption of mobile phones, BHAs, you know, CDs and all of that, but nothing like this, you know, at this scale. So it's a very good place to be. And just to answer your question, yes, there is a discount on companies, but it doesn't mean that we cannot add a significant value into what we're doing. So the discount is, the gap, I agree, is getting smaller because there won't be enough of all the materials in the market. And then the market won't try to be that cute and say, oh, where is this coming from? So whatever it is, you know, just get into it.
Thanks, JP. Liam, I want to pick up a point that Christian just made about the investment by the majors in both of your companies. If Australian investors or the market is discounting Latin American projects, the likes of BHP and Newcrest certainly aren't. You know, they're both on the register, and I imagine they've given you plenty of sleepless nights at times about. Can you maybe explain a little bit about what's happening at the moment with SolGold and how important it is, or what the role of a major is in a junior company that's got such a big project?
Well, it's a fabulous thing to have a major on your register because it's an endorsement of the asset and the company. So that's a big plus. And they've got the capacity to underwrite and assist with your fundraising. So having a major there, we've got Newcrest and BHP with 14% each. But they're not there because they've got nothing else to do with their money. They're there for strategic reasons. And we've seen the M&A side pick up across the globe. If you look, most of the deals in the mining space in Australia anywhere are friendly deals. You know, company A takes over company B, it's a recommended deal. But we've seen this big punch up in North America with Naront. The Naront shareholders are going to be the winner between Twigger and BHP. Locally, it's moving from friendly deals to hostile deals. And it just shows where you know, assets are harder to come by. There's a disparity now in valuations, and people are prepared to not wait for a board recommendation, but just come over the top and go hostile. And we're seeing that with Westgold and Gascoyne locally. So that's an interesting dynamic to play. So we've got a couple of majors on the share register. They provide, they've both got the capacity to put a director on the board, but they haven't. It is good to have them there, but it does create some tensions in many respects, and that's if I can move into, you know, the COVID world. In terms of challenges with COVID, I mean, all of our people in Latin America, in Ecuador, are vaccinated. We've got 900 employees, almost 100%, be 99.9% vaccinated, double vaccinated. So how has COVID affected our operations? Not much. But as a board, you know, with taking the company forward, we've had 4 new directors last year. We've had a change out in our CEO. We've got a PFS coming through, trying to manage people in Quito, London, you know, Vancouver, Perth and Brisbane. And as humans, we need to interact. And, you know, tensions arise from time to time, but be able to sit and deal with things face to face, you can resolve it. But trying to do it via a Zoom screen or a Team screen, it adds an additional dynamic. And it's all, everyone needs to have robust debate and discussion, but that's probably been, to me as chair, one of the biggest challenges is trying to chair, you know, 20 board meetings via a Teams environment or a Zoom environment, and managing that debate and build that trust and relationships when ordinarily you'd be doing it across the table and face to face.
Christian, again, you're smiling at Liam's comments. What have you, in Hot Chili's approach to the pandemic, have you faced similar challenges? What's the situation on the ground?
Yeah.
What's the situation at in corporate level?
Yeah, I'm smiling a lot because, you know, the same conversations in Hot Chili, operationally, very, very similar. We handled it very well during the COVID period of real concern, and Chili's obviously, I think, second fastest vaccination uptake in the world. We're very, very fortunate to be in Chile, firstly, to be operating in a country that's a top 3 mining jurisdiction. I think corporately is more where the question goes and how we interact with all of our stakeholders, whether they be investors or shareholders or the Glencores of the world. You know, it's changed the way that we manage. There's pros and cons. You know, certainly I think that personal one-on-one approach and what can be communicated, sitting down one-to-one is missing. But then outside of that, it's forced us to change how we manage and how we interact with our team on the ground. And that's really added a fair bit of self-improvement in our organisation at Hot Chili. You know, I think that you know, above all, we started the pandemic with a focus on keeping all of our people safe, adjusting our business so that we could operate, and then it changed to changing your entire management structure as to how you manage efficiently, and we found a lot of efficiencies out of that. But don't get me wrong, it doesn't mean that I'm not missing my many months of cumulative time in airport waiting lounges. But certainly it's a new world, and I think it you know, from our perspective, it's driven a few efficiencies. We found a lot of positives out of it.
Darren, Christian's point there about giving more self-improvement, I think was the phrase you used, or empowerment to the local workforce. Does that hold true in Brazil and in the communities that you're operating?
Absolutely. Yeah, no, for us, the team is being critical. Again, really well responded group of people from a vaccination point of view. You know, they all want to work. So, you know, they're prepared to come along for the ride. I think we're up to probably, you know, 75, 80% double vaxxed now. So, you know, in the environments where we are, we're sort of moving through that reasonably well. But, you know, the team in Tucumã, where our project is located, has been growing through this whole period. I mean, we picked up this project a bit over 2 years ago, and we've been working through it. The team's been building. We've got more drillers on site. We've got more other sort of contractors around, and that team is just getting bigger and bigger. And if it wasn't for, I guess, the protocols that you put in place at the start, you wouldn't have been able to get to that point. But now, you know, these guys are driving that change themselves. They're happy with the environment that they are. Sure, no one wants to be wearing masks and doing things like that, but, you know, that's become part of how they can see this project grow. So I just look at the way that our guys have taken on this challenge over the last couple of years, and they've been exemplary as far as the performance that they've had, and you can see with the results that we've had in the market, you know, the drilling that we've been able to do, all of that stuff is because of what the team in country has been able to put together.
Great, thank you. I should have mentioned before that I'm not prepared to do all the work myself. Now that you're digesting all your food, it's beholden upon you to put your hand up and ask some questions. So I'll come back to you in a moment, and certainly as well for those joining us on the live stream, please tweet your questions to us, and my colleagues will be able to let us know what the questions are. Just on, Darren, I'm going to stay with you, just on the issue of COVID and your interaction with community. What are the particular challenges around ESG in Brazil or in Latin America more generally? Are they different to what the approach in Western Australia, or even the approach of Australian companies in, say, West Africa or other regions?
Look, I guess I haven't actively operated in an Australia or West Africa environment to directly compare it, but What I would say is that ESG is as important in Brazil as it is probably anywhere else. I think that's driven a lot by the investment community that now needs to see what you're doing in that regard. But we've always had that strong philosophy to environment, social side of things. And I think operating in Latin America, you actually feel you can actually make more of a difference, particularly in those local communities. Some of these areas are a lot poorer. They don't have the social security system, they don't have the health system, they don't have the education system. So there's things that we can do along the way that is obviously going to improve those communities. And long term, it's about more jobs in the region. And if they've got work, then like anyone in this room, if you feel like you've got some job security and you're getting paid every week or every month or whatever it's going to be, you feel a lot safer and you feel a lot more comfortable about yourself. So I feel, particularly in Brazil, I'm sure it's the same for these guys, that ESG is super important, but in those environments we really are, I think, making more of a difference in some of the things that we've been able to do.
JP, environmental concerns are obviously in the wake of Samarco and disputes over water usage. It's a huge concern for a lot of investors about the environmental situation in Latin America. How are you approaching it in Argentina? Is it a challenge?
Well, where we are located, just to clarify, we are in the middle of 4,000 meters. In the middle of nowhere, there's no one living around us. And there is flora and fauna, and any mining activity will impact the environment. By sitting here, we all impact the environment as well. But we're trying to minimize it. We've always been conscious about what can we do and learn from others. I mean, this is we always learn through unfortunately through other mistakes, but there's room for improvement. In our end, we're not affecting any irrigation systems, no agriculture, no water usage, but we're conscious there's flora and fauna there, and for such, the environmental, the social and governance, the ESG, it's always been there. It's just been named ESG these days, but from our end, we always been have a very strong component also on the social side of things. It does make a difference by you being there. To me, this was a bit of a dream, but then it's all start feeling closer when you start noticing that you're making people's difference lives, and you can go there and people see that something, especially in COVID. COVID affected South America badly. And the fact that we were able to keep going and give jobs to people through the pandemic and high unemployment is a massive difference, and it's something that makes you feel personally good. In terms of the environment, we're doing all the monitoring for the, in all the areas that we are on the river. We want to understand what setting there is. We've done flora and fauna studies already as a baseline. The Catamarca government also asks you to do that, plus archaeological studies, because you don't want to disturb anything that's been there for a long time as well. We are very conscious and respectful of that. We're not the first one in that area. So yes, COVID has affected everything. There's a mitigation. All our people that we working with Galan directly, they've been fully vaccinated as well. We're complying with what is required. It's not a perfect system, but we're trying to minimize things. And so the world keeps going. And the study that we're doing now for the ESG side of things is that we're trying to calculate our own carbon footprint. So we engage with the company because we have studies. So we want to see what's our CO2 footprint going forward. And then from that point, what else can we do to minimize that impact? So there are many avenues. There is carbon footprint, there is the social side, there is environmental side, and there is COVID. And while COVID now is we see the light at the end of the tunnel, the biggest issue with COVID today I have in Australia, because I can't go back to South America. I can go there, but I can't get back. So from the government side, I think from Galan, that's the biggest issue as a company, that there's no clear path as when can I go. I'm dying to go. And COVID is here, there's hardly anyone's here. It's a reality over there. And I know that we're all trying to keep safe, but yeah, that's one of the things that you have to handle and manage by operating. My WhatsApp is full of messages day in, day out, because you have to make it work. But yeah, it's manageable. There is conscious, and the government there understands that. We understand it, and the local guys and the team and people in Argentina, they understand that, because we have local communities that while they're not living there, they live close by, and we want to make a difference to their lives. So we want to employ them, and that's what we always have done. And even in Argentina, one of the things that I had to do, it's to get a drilling permit, you need to go and present to the community, not the community that's here, it's all the surrounding vicinities. Present your plan, explain what you're going to do, what's your long-term plan if it works, and what are the steps you're going to take to make a difference. And initially said, look, we can't do anything more than give you jobs. And people took it and said, right, we like that, we'll let you go. So there's a social contract at the end of all these presentations of all the communities that they agree in let you work. And the government, the government's got the authority to let you do it, but we need a social license. That's something that we've done, and we are working towards the next step going forward when we like to apply for our production permits. Hopefully that'll be sometime next year, but that's all part of the same. And Galan's view is, we work together with community, and it's interesting, as a small company, when you present these sort of things, they all listen to you, but when at the same time, my presentations was 20% Galan, and the rest was a whinge about the larger companies that operate in the area that they don't engage as much. So yeah, there's room for improvement, but it's something that it's an evolution of things, and we're trying to do our best and trying to stick at it.
Christian, investors across the world are putting pressure on every company, every mining company, every corporation really to not only improve their ESG credentials, but report on them in a way that people can easily take in. Have you noticed that shift in investor attitudes towards ESG and the expectations they place on you?
Yeah, particularly over the last, really the last 6 months in particular, interacting with North American funds and institutions. I was on a phone call with a couple of fund managers that are just, they're starting up a couple of $1 billion fund out of London, a couple of lovely girls, and they sort of wanted to know about the project, but before you go into the project, tell me about ESG. And I said, well, we're in copper, so we're at the forefront of the future-facing metals market. And they said, great, okay, that's a big tick. Now tell us something else about ESG. And this is how, and it was a very non-typical phone call with a fund manager. I've had 7 or 8 of those now in the last 6 months. So it is definitely coming. It is definitely on the radar of the Northern Hemisphere capital pool, which is 78% of the world's capital pool in this market. So it is coming. It's something that all mining executives are going to have to get used to and build a framework. And I think importantly what you said is how we report on it. I think that Hot Chili probably does a terrible job at reporting on our ESG framework. We haven't really actually begun. But sitting behind that, we know we're sitting very, very strong because of where we are in the Atacama, because of the immense amount of photovoltaic input that's gone into the energy sector there, and sitting right next to huge solar farms north and south of our projects. Because of the footprint of the project, because of all of these factors. But before 6 months ago, I didn't call ESG. I knew it as partnering. And what does Hot Chili do very well? We partner. We partner with the government, we partner with the local community, and we partner with our environmental obligations and all of the stakeholders that give us a social license to operate. And you've got to come into any of these propositions from the first exploration drill hole drilled all the way through to pushing the button on the commencement of construction with that attitude. It's got to be at the forefront, because building mines anywhere in the world is just getting harder and harder and harder. It's not about just shareholder return. And the mining industry has been evolving and sort of metamorphosing from a worm now into a butterfly that is acceptable to society for where all of these natural materials come from, and that partnership with society in the actual end use of those natural resources. So I'm not sure at all whether I answered your question, but that's my take on it.
We'll get Liam to finish answering it, because I'm going to ask Liam. Liam, you boasted before about SolGold's first mover advantage in Ecuador, but it strikes me that when it comes to ESG, that probably comes with some, if not disadvantages, at least sharper focus on your ESG credentials. And Christian mentioned the importance to Northern Hemisphere capital markets about ESG. Are you seeing?
It's huge. I've been put through the ringer this week on a corporate governance roadshow. So on the ground in Ecuador, our local community are all focused on getting jobs. They want us to be a sustainable miner, but we've got 900 Ecuadorians on the payroll, and we've got to manage their expectations. The biggest criticism that we might get from the local community is not giving them enough jobs. So, you know, we've engaged with our community for 10 years now, and, you know, we're really part of it. If we have to go to the government to try and protect our asset, it's too late. The horse is bolted. So our social contract, our social licence to operate is fundamental, and I think we do that really well. The challenge with UK capital markets is that you've got these proxy advisors that then provide advice to the funds, and they say, well, you know, do you have an independent board? Do you have an independent chair? Do you have an independent REM committee? Where are you with your nom committee? Where are you with your female representation? Where are you with your Indigenous representation? And one of our slides is our corporate governance checklist, our pathway to compliance with the UK Corporate Governance Code. And if we don't do that, then a lot of the big funds will vote against our resolutions and our fundraising resolutions at the AGM. So I think you can be under the radar maybe when you get to about $1 billion, but once you get over $1 billion market cap, you just get hammered. So I've been doing the dance, and it's a really important thing, but you can't ignore it. And you just can't fill your annual report with 140 pages of, you know, kids running around clapping and going, aren't we good? Because a lot of these proxy advisors will outsource the review of your annual report to someone in India, who'll then try and tick the box to see, you know, how do you comply? So you've actually got to distill that into some sort of corporate governance checklist and spell it out and get the proxy advisors on side, so they'll then make the recommendations to the funds to support your resolutions.
So it's the reporting, in fact, as Christian said, that's as challenging as the actual outcomes that you're seeing on the ground. You were mentioning to me before we started about the 1 million trees that you've planted in Ecuador. But, you know, if you can't report that effectively, as Christian was alluding to.
Well, yeah, so our exploration director is being nominated for an international award because he's part of a 1 million tree program, and we're on our way to planting 1 million trees in Ecuador. But that doesn't necessarily cut the mustard with some of these ESG groups that are reviewing us. And you can't, you know, you've got to roll with it. You can't complain because, you know, if you want the funds, if you want a lower cost of capital, if you want more institutions to invest, you've got to be compliant on your ESG. So, and it's not box ticking, because you have these funds that will hold you to account where they're accusing, you know, people of greenwashing. You've said you're going to do this and you haven't, and you'll get litigation. So people will be held to account. So it's a big thing, ESG. It's not going away. It's something we embrace, but it's an added challenge. And as you put your head above the parapet, Christian, there's more coming your way.
Darren.
It's good intentions, mate.
Yeah.
And I agree with
what it means. You know, I agree that it's, you know, you should have better representation. You should have all the things they're saying is how you implement them. Sometimes it's the execution, and to get there, it's not that easy. But in principle, I do agree what it needs to be done. It's a challenge for us, and this is what we're doing. So,
Darren, is there a disparity then? You were talking about how, with great pride, it seemed, of what you've done on the ground in Brazil. Is there a disparity between the expectations around social license to operate with the community, with the host communities that you're operating in, and the expectations around ESG from a North American or UK or European or Australian investor?
Look, I don't think it's necessarily a mismatch in expectations. I think it comes back to reporting. So, yeah, as we start to evolve through this, you try to put a framework around the things that you're already doing, you go, oh, well, yeah, I do that. And if you can actually put it together in a concise report and you present it, I think you'll find that most companies are doing a lot of the things that these investors would be looking for. Now, as Liam said, as your market cap goes higher, you're not actually dealing directly with the investors, but you're dealing with proxy advisors. So then you've got to go to that next level of being able to explain yourself. But, you know, I think a lot of the work that we're already doing in country, you know, would meet these criteria a hell of a lot. And I think we've seen really a little bit of a shift in the way that people perceive us as we put out a report on where our carbon emissions were. You know, that was going back to the diggers and dealers, and at that point in time we did work with a group in London, looked at the emissions relative to, you know, MPI and ferronickel and, you know, the HPAL projects and where we sit. And, you know, obviously we're not in production yet, but where we're likely to be because of, you know, Brazil being principally renewable-based power, all of a sudden people go, oh shit, it's actually a really good approach that you guys have got. You're going to be really low emissions. Oh, this is an investment that I hadn't really thought about before. And so people have then been coming at it more from a perspective of the ESG side of things rather than necessarily purely on the fact that, you know, what you're doing on the nickel side of things.
So if we've got that, Bill, we're going to start an ESG reporting consultation business that we can produce everybody's ESG reports for. Thank you very much. Right, we've got some questions from the floor. If you just want to raise your hand and just let us know who you are, just coming behind you, John.
Oh, thanks very much. It's John Goodlad from Euros Hartleys. I've got a question for Liam and then perhaps a broader one. But Liam, in terms of, obviously, SolGold's a fabulous Australian success story. And it is somewhat frustrating that the only way we can really buy shares here is through, you know, peripherally through Newcrest or BHP. It'd be nice to buy them here. It'd be nice to be listed here. So, you know, what are your thoughts about a patriotic listing? Secondly, and just a broader one for all four of you, you know, what's happening in China as a major consumer of what you produce, and should we be concerned? Thanks.
First one, look, in terms of listing on the ASX, I guess I'd love it. We'd probably get Argonaut to underwrite it. Just kidding, just kidding, just kidding, just kidding. No, look, you've got to go where the money is. We've got 2 listings. Having a 3rd listing, it is a big drain, and you've got to work out whether it's worthwhile. Our primary listing is on the London Stock Exchange, and there aren't too many people like us. I'd argue we're a bit of an albatross there. We should do more with our TSX listing, and there may well be a rationale to come and join the ASX. So I would be supported, but it's not about to happen overnight. But it's a good question. You've got to go, you know, where the money is, and there's plenty of money in Australia at the moment. And in terms of the outlook for supply and demand, copper is going to shoot the lights out. I think there's going to be a 6 million tonne per annum shortfall of copper. I mean, world growth, is it stalling? Maybe through COVID, but I think net, the demand for copper is huge. There's only been one major discovery really in the last 10 years, and then the time lag to production it's a long way off. So there's going to be a squeeze. I mean, the copper price, spot price is insane. It's heading towards $5 a tonne, $5 a pound. And here's the thing: we're going to do our feasibility studies of $3.30 a pound. Can you believe that? So that, you know, why can't we use higher numbers? But gradually we'll get those experts to bring up that price so we can you know, mine more copper. But it's we're not worried. I think we're coming onto the market. Of all the things in life, timing is what you want. You can have the world's best project, but if the market doesn't want it, it's too bad. But you know, to have a great project and come on when the market's looking for what you have, be it, you know, nickel, copper, or lithium, that's where you want to be. So it's a great time to be in the business.
Look, I'd just add, I guess, from a nickel perspective, you know, you feel like you're in a bit of a new market, and it's not just entirely related to China anymore. So, you know, you see the investment that's been made by the OEMs in Europe, you know, in North America, and there's, you know, billions and billions of dollars. I think I heard the other day up to about $400 billion of investment that's going to convert these internal combustion engine factories into batteries, the production of electric vehicles. And so, you know, you feel like now in the sort of commodity sector that we're all sort of involved with, that there is a new phase of growth that's going to come that hasn't been around before, and I think it is a little bit generational. And, you know, like Liam said, in copper that's probably going to rise, but I suspect in nickel, you know, particularly in, you know, low emission nickel sulfides, you know, where are you going to get it from? Yeah, the discovery lead time is huge. So, you know, you feel like over the next 3 or 4 years, it's just got to have upward pressure on price.
JP, we've seen a lot of discussion here, and particularly in the US and Europe, Japan and Korea, about critical minerals in regards to EVs. Is that discussion going on in Argentina and in Chile as well?
No, these days not so much. It's more about how much added value you can put into whatever you're doing to get the best for the country. So the more processing you get into that, that makes sense. But you cannot have an industry overnight to produce batteries. You know, like there's a lot of know-how and PhD in Korea, Japan, and China that can do a lot cheaper and quicker than what you can do in Argentina. It's a good aspirational target, and the government should try to pursue that, but it should not be the only way to go forward. So the market needs to grow, the Argentine lithium market needs to grow, and specialize and open the borders, so those sort of things need to happen. Same goes in Chile. In Chile, they try. The government trying to do a push with the units and everything else, and 10 years later, still got nowhere. So lithium it was seen through the Cold War as a critical element, and it was not allowed to be produced. But now, the last week, they came out with news about giving quotas for production, which is a good sign. But the discussion is not about where is it going to go. It's what can we do to get the most value out of it. That's what the view is from over there. Then it's not about this is it should go to east or west. You know, it's more pragmatic.
Christian, did you have some comments to make? Ones that you can say.
Look, you know, I'm sitting here with a group of gentlemen, including Hot Chili, that we're I think combined, we're sitting on probably some of the largest development plays in the new metal space. You multiply the spot price of nickel or copper or lithium by the amount of contained, you know, mineral that we have, and the leverage on the companies sitting here on value is, you know, mind-boggling. Guys, would be over 100 billion IGV. You know, Darren's sitting on probably close to 25 billion IGV. We're sitting on 50 IGV, and you're right up there. So firstly, you know, I think where the commodity prices are going. You know, I laughed last week when we saw a couple of investment banks put a bearish case on copper, and you know, we had UBS, and we had you know, the guys over at Macquarie, and even the Wood Mac guys call copper the end of the phase. We're heading back to $3.30 per pound really quickly, and when I heard that, I started rubbing my hands together, and I had the biggest smile on my face. It took a week. This morning, we got the note from UBS. They'd dramatically done a 180 degree on their forecast. 2 days ago, Macquarie, and I'm waiting for Wood Mac's pull back. But we like to play the ball that's in front of us. We really like the change that's going on, and we think that these medium and long-term aspirations for where the world is going from electrification for perspective, you know, they're not going to change. The momentum is going to get stronger, and anybody sitting with very large resource inventories, such as the ones that are sitting here, are going to benefit significantly. So, as Liam said, it's all about being in the right space at the right time, and that's what's so exciting about this game at the moment.
Thanks, Christian. Right, we've got time. Yep, we've got one with Mel's got one, and then Carly's got one.
Thanks, mate. Thanks very much. Yeah, Mark Warren, Optero. My question's for Liam. G'day, Liam. It's on ESG and proxy advisors, picking up on what you said about getting the proxy advisors across the line with respect to what you're doing with ESG. And I guess picking up on a question that was, the point about, was also mentioned about how there's been an acceleration from, certainly in Hot Chili's example, of fund managers, the accelerated interest in that subject and how they're grilling you all the time. I guess I'd have two contentions. The first contention that's coming from the proxy advisors largely. And second, you know, when you look at the proxy advisors, it's a very narrow group. For instance, if you look at institutional shareholder services, which I'm sure you're dealing with, I think my second contention would be that, let's say they're fairly narrow ideological bent. So the question to you is, can you as a company realistically mould or shape the views as to what they have with respect to what you go to, or do you think it needs a broader industry approach to dealing with this dominance of proxy advisors, a small group controlling a large group of funds?
Good question. I think if we had a more standardised reporting format, so you can crystallise where you are on your carbon footprint and make it very easy, and then if everyone has the same reporting format, you don't need Glass Lewis to then charge a fortune and give it to the investment funds. But the pool of funds is insane. It's in the hundreds of billions that are looking to get an ESG and a green investment. So if you can meet that criteria, your cost of capital is going to come down and there's more funds that will be looking to buy you. So as much as they're a pain in the neck at times, it's worthwhile meeting that criteria. The issue is that we haven't sort of drilled down exactly what the criteria is. What are we trying to meet? When we can distill that so it's a single report card, then you won't need all these advisors. You can have one page in your annual report say, look there, and that will then open the door to a lot more funds. But at the moment, there's an arbitrage where it's all very difficult and complicated, and the proxy advisors have to wade the way through that and advise the funds accordingly. But if we could have a simple report card, we could probably get rid of the proxy advisors and open the doorway to a lot more money.
We'll cancel that reporting consultation. We had another question, Carly?
Hello.
Hello.
Hello, everybody. Bo Nichols from Elvo. Thanks, Dom. I've got three questions. One's for Liam, one's for Darren, and one's a punt. Today at 8:30, Elvo entered the ASX. Rang the bell, all that stuff, myself and Graham, and we're the newest entry onto the ASX for Latin America. So I think you should all give us a clap.
I think you should all.
Thanks. And we're cranking too. We're almost double what we listed on. So that's all good news. First question is for Liam. And the second is for Darren. I'll leave you both with the questions. The first one is, Liam, you got 900 employees. The question is why? And the second one for Darren is Brazil, 80% hydroelectric energy, carbon neutral. Why are you not promoting that like some of these North Americans as a carbon neutral nickel producer in the future? And that's it, thanks.
Thanks, Bo, and congratulations on your listing. In terms of your question, why do we have 900 Ecuadorians working for us? I thought when I joined SolGold that Nick Mather was trying to corner the market for geologists in Ecuador so no one else could get in. You couldn't get any help, so we'd corner the market there. But we spend a lot on exploration, the salaries aren't particularly high, and we get good value. We've got drill rigs turning, we've got the communities behind us, and it is a big number, and it's something that we're mindful of managing expectations. But I guess we're proud, and it's why we're so strong with the community. And when you look at the dollars for investing in employment and the community versus getting their support, it sort of goes hand in hand. So we want them to be championing with us to the government for our approvals, rather than us trying to get the government to approve and then deal with the community. So we're arm in arm. So it's a good question. I did query it myself, but I think it makes sense. Darren?
Yep, and well done, Bo, on your listing. We're actually really happy that they've got groups of people coming back into Brazil from the Australian market perspective. The more that people can shine a light on Brazil, the better. Rob Smackman, who leads Elvos in Brazil at the moment, and obviously has operated there for a long time. So I guess back to an original point about time in country, knowledge of the space, all of those things, and I so expect that Elvo is going to be a really strong success. With respect to the ESG side of things, I think it's something that is becoming more prevalent, and it probably is something over time as we get further through the studies and development phases that we put more emphasis on where we're sitting from an emissions perspective. It is one of the, I guess, strategic advantages of Brazil that you've got 80% coming from renewables. In all likelihood, by the time we're up and running, we'll probably be running 100% off renewables in that part of the world. So I think it's becoming more and more prevalent, but up until now, we've had such a good project, mate, that we wanted to keep talking about the project itself before the ESG credentials, but now we're seeing where the market's going, and we're going to have to change our tune. Anyway, good question.
Thanks, Paul, and congratulations. Have we got time? Michael, have we got any questions on the social media? One, yes.
Darren, we got one from Arnold. He wants to know, what are your ongoing commitments to Vale?
So when we did the original transaction, we paid them a small amount of cash and then swapped out a Greenfields copper gold asset next to their Salobo mine. We have a couple of other deferred payments to make, one ongoing into bankable feasibility study, one going into commercial production, plus a royalty stream. So 1.75 mil to them at BFS, 5 million on commercial production, which in effect becomes part of the cost of the development of the project, and a 0.75% royalty to Vale.
Thanks, Michael. I think that's it. There was no questions about my shiny patent leather shoes. I wore them especially for the live stream. Well, I think we're nearly there. The coffees are coming out. Everybody's finished their lunches, so I think we can ask our panellists to take a rest now. So can you just join me in thanking our panellists, Christian, JP, Liam and Darren?
Well done.